right, great. Thank you, Colin. We appreciate you taking the time to be here today. And at this time, I'm going to turn things over to Thomas of OrderflowEdge. Thomas actually presented to our group on Tuesday afternoon, so we're getting a double dose of Thomas. So, Thomas, we greatly appreciate you being here again. If you want to go ahead and get your screen sharing going, I'll turn things over to you, and then the next 30 minutes, the room is yours.
All right, can I get a sound check, please? Excuse me. All right, good stuff. Thank you, guys. Pulling up my screens now. All right, you should be able to see my screens, my actual screens, live screens here, which we're going to share in a few minutes. But I want to just go through a few slides here first so we can explain a few things about who we are, what we're about. Let's give this a second to load up. All right, good stuff. I am Thomas DeLello, head trader and founder at OrderflowEdge.com. I'd like to thank everyone for taking time out to join us here today. It's a very short webinar. We're trying and get in as much as we can. Pleasure to be here. I'd like to thank Morgan, Chuck, everyone who helped put this together. Again, we're in great company here, and we're happy to be an education partner with these guys. Great group of presenters here today. Our goal here today is to give you an idea of our trading perspective and to show you the info that we look at and how we have that info organized on our screens in a very simple, very visual manner. Then if what you've seen and heard here today interests you, if it makes sense to you on a basic level, so we're going to go over just a few things here today. We can't try and jam too much in. What we're going to do is invite you to look for more info on our website. There's a spot there to join us for a free trial and kind of get an inside look, so to speak, of what we do in our trade room. Watch us analyze and trade the markets live and see us practice what we preach real time. And that'll give us an opportunity to go much deeper into exactly what we do with our trading. We love questions. I love talking about the markets. I could sit here and talk all day about the markets, but since we don't have a lot of time today, probably not going to be able to get to all of them. So please, if I do not get to your questions, feel free to email them directly to me, Thomas at OrderflowEdge.com. We also have Casey here from OrderflowEdge as well, and he'll be answering questions and providing that link to my email and also the link to the website. Now, what's my experience? I'm a full-time professional trader, and I've been in the markets for over 17 years now, since '96. And, just like everybody else, a good portion of those years were spent running in circles, collecting information, jumping from one thing to the next, looking for the Holy Grail, but all I kept finding was the Holy Fail. And what I did while sifting through all this stuff, little by little, that, coming across majority of stuff that was useless to me, but also coming across concepts, bits and pieces of data, of information along the way that seemed to be helpful, seemed to make sense on some level, but yet on its own didn't provide an edge. You kind of mentally stored them, I guess, for later use. And eventually, down the road, putting these things together piece by piece to develop my trading edge, which is what I use day in, day out. It's really a simple formula, a few different concepts, core concepts that form the foundation for the methodology, and that's what I use to trade order flow. And what I realized over the years that, everyone wants to know the future, but we're all horrible at predicting. No one has a crystal ball. So after finally admitting that to myself and accepting that I was unable to predict what price was coming next in the market, I thought about it from the angle of what actually drives price. Why did price move? Was it because of some price-based indicators, or was it because of the buying that's coming in to the market, the demand? Didn't have anything to do with any talking head on CNBC or any sentiment or anything else. It was because of the buyers and sellers coming into the market. So it made sense to me that if I could focus on the right data, the relevant information, that maybe I could provide myself with a framework around the uncertainty that I know is always present in the market, and then build an edge around these repeatable conditions and patterns in the order flow data that I was capturing, and the order flow that actually drives price, and that's what I did. Data provides opportunity. The challenge for me at that point, after realizing, hey, I think I'm onto something here, but now I have a challenging of whittling that data down and organizing it in a way that makes it easy for me to identify opportunity when I have the odds in my favor. So my challenge here today is to leave you with some useful information as much as I can in the very short period of time that we have together. And the best way I know how to accomplish that is to share with you some of the resources, the data, the market info that we utilize in our trading every day in order to help us make better real-time trading decisions. So that being said, let's rock and roll. Let's get right into it. Today we're going to discuss order flow trading and supply and demand. So let's get some basic definitions out of the way. We're just going to skip the webinar plan of action because we'll have to see how much time we have here. But let's just start to get right into some definitions here. What is order flow? Since this is going to be the core of what we're speaking to today, and everybody's on different, knowledge levels, experience levels here. So we're going to start with some basics. It's the real-time supply and demand caused by all the buyers and sellers coming into the market. And, the expression order flow seems to have spread all over the internet. It's one of these new trading buzzwords, I guess you could say. People make assumptions about what it means and how to see it and how to use it. But simply put, when it comes down to it, it's the real-time supply and demand caused by the buyers and sellers. Right? This is what actually causes price to move. When you enter a trade, you become part of the order flow, the trade. If you're buying the offer price, you become part of the buy pressure occurring at that time. And it's the collective actions of all the traders entering the market in any given time which creates the order flow. This is what drives price. So simply put, order flow is the fuel that drives price. When you execute a trade, you become part of the order flow, and it's the collective actions that creates this overall flow of orders that we are tracking. Two very important points that we're going to come back to, which might not be evident right now because we haven't looked at any charts or anything, but remember these 2 points. Order flow drives price. Change in order flow precedes change in price. Right? And we're going to get back to that again.
Surge alert.
Whoop, that's a real-time alert coming in on charts that we're going to look at in just a few minutes. But second definition we want to get to is supply and demand. Again, basics, but we need to get some of these definitions out of the way to make sure everyone's on the same page. Supply, when we say supply, we're talking about sellers. Demand, we're referring to buyers. Right? In any market, prices are driven down by excessive supply and up by excessive demand. When supply and demand are equal, they're balanced in value. We could see price moving sideways, consolidating. It's more of a two-sided trade. Usually not a lot of opportunity within that two-sided trade. It's when the supply and demand becomes imbalanced and price starts to move out of balance, or we could say it's trending on that time frame to find value. That's when the opportunity appears for us. Here's a simple screenshot of how we illustrate supply and demand on our screen. Supply zones above the market in red, and we're always looking at the market in terms of areas where either supply is in control and we want to look to be a seller, and areas where buyers are in control, these areas in blue, demand below the market where it makes more sense to be a buyer. Now, when we say be a buyer down here, we could be a buyer to buy back shorts from higher levels, or be a buyer to initiate longs. Same thing on the supply side here. When it makes sense to be a seller, we could be a seller to cover longs that we bought down here, or become a seller to initiate shorts. How do we know where sellers were previously? Well, from a real basic level, I mean, we have some, obviously a little bit deeper way of looking at things, but from a very basic level, all we have to do is look at the charts. And any area where market previously sold off from, we know that in that area, supply overcame demand, right? So even in here, the market sold off from this area in here, we know that sellers overcame buyers in here. Right? The market rallied up from this area here. We know that buying overcame selling in this area here. Another term that we refer to is smart money. And when we say smart money, very simply, we're talking about the consistently profitable traders. right? We could be talking about individuals, market makers, floor traders, banks, commercial entities, financial institutions, and of course the algos and the bots that are so active in the markets these days. And your challenge in becoming a successful trader, when it comes down to it, it's to understand the actions and strategies that successful traders employ, right? And how they differ from those of the unsuccessful traders. You know, it's like someone who says, I keep falling off my bike and hitting my head. Why? I'm confused. Why can't I ride my bike? Oh, and by the way, I never really learned how to ride a bike. You know, it's the same thing in the markets. We have a lot of traders who I used to be the same way. I'd be confused about trading. You know, why do I keep getting stopped out? Why can't I earn a consistent profit? Why do I consistently lose? Because I don't understand market basics. I don't understand the driving force, supply and demand principles. You know, it makes sense. If you wanted to take over a business or buy a business, it'd be pretty foolish not to understand the mechanics of that business, right? It's the same thing in trading. You are running a business here. So with trading, you need to fully understand and develop an intrinsic understanding and knowledge of how the smart money operates in this business. Then you need to form the ability to interact with what they're doing and profit alongside them. The thing about smart money is that they have an understanding of the way the markets operate. And it's not a special understanding of math or secret indicators. They understand that the markets are an auction made up of people just like you. And they know what makes other traders tick. They know how to push the markets into areas where retail traders are going to get trapped. They'll be motivated to take the wrong action. And, you know, this is a subject that I could speak hours and hours alone just on the smart money side of the market and thinking in terms of the smart money. And we'll talk much more about this in our trade room if you join us next week. But we got to think in terms of the market being a zero-sum game. Right? When you lose money in the market, guess what? It's not disappearing into the market. It's some black hole. Some other trader is making that money that you lost. And it's a viewpoint that few people think about when they get into the markets. But important part of that thinking is when you get into the market, who just took the other side of your trade? Right? If the majority of traders lose consistently, what should our goal be? Well, it should be to take the opposite side of the losing traders that are in the market and trade alongside the smart money. Because guess what? If you get into a trade and the person on the other side of your trade is a consistently winning trader, odds are that trade's going to be a loser for you. So what we do when we trade, we talk about stacking the odds, trading with an edge. How do we do that? Two core concepts. We identify previous areas, historical areas of supply and demand and order flow. When the market gets into these areas, then we're looking at the real-time supply and demand, the real-time order flow for confirmation. When those two interlock, we call that the sweet spot, the spot where we have the odds in our favor. We're creating a synergy, right? Here's one of the big differences between retail traders and professional traders. Retail traders want to be right. Professionals just want to make money, right? And what most traders are worrying about is whether or not they're right on a particular trade, right? While pros are concerned with whether their action on that particular trade is going to give them a profit enough of the time, which is a totally different way to think. And that's what trading in the sweet spot means. It doesn't mean that every time we can identify this opportunity, it's going to be a winner. We just mean, what it means to us is that we have confirmation that probabilities are on our side. And that's what it comes down to. There's no certainty. It comes down to probabilities. Here's a visual of what this looks like on our dashboard. Market coming into a previous area of supply, an area where selling overcame buying the last time the market was up there. And now as the market's coming back up into this area, we have real-time order flow clues. Now, we're not going to get into the specifics on the clues, but very basic. Here's just one basic clue right here, this divergence that we have here, showing us that as this high is being made, we're coming into a previous area where it's already identified as an area where selling overcame buying. It's a very defined area. The market comes into the bottom of that area. Now, real time, we can see, hey, you know what? There's more sell pressure than there is buy pressure. You can't really develop more of an edge than that. Now, does that mean that the market can't burst through this zone? Of course not. The market could do anything at any time, but the idea is we're trying to stack the odds in our favor. You know, look for that synergy between previous areas of supply and demand imbalance and the real-time supply and demand imbalance. So this is our basic formula, guys. It's not anything super secret. It's really something very uncomplicated and simple. Step one, identify ahead of time. When the market gets into these areas, we're reading the real-time order flow for clues, for confirmation to actually execute a trade. Because here's the thing, we can identify an area above the market where we want to be a seller. Maybe now conditions are different. Now all we see is buyers fighting over themselves to get into the market. Well, that's going to cause us to step back and not take a short there. Step three, if we get the confirmation to actually enter the trade, we're going to continue to read the order flow and use that real-time order flow information to effectively and dynamically manage your trade. Right? Much different than just getting into a trade, putting in your profit target, putting in your fixed stop, and sticking your head in the sand. You know, we're always identifying our risk. We're probably one of the most risk-averse group of traders you'll find, but we're dynamically managing that risk like we did today. Hopefully we'll get a time to show you a quick example of a couple of trades that we took today, real time in the room, you know, with our members, and we actually had a few guests in our room this morning as well. But it's really just a shift of focus, guys. It's not, you know, trying to look at something complicated. The hardest thing is to learn to shift your focus from the information that really doesn't pertain to price movement and switch it to the information that's important. So let's get into our dashboard here. This is our order flow dashboard. And I think at this point, what I'm going to do is actually switch to live screens. Can everybody see my screens okay on here? Good stuff. All right, so I want to get my marker going here. Okay. All right, so this is our dashboard. And, you know, we call it our order flow dashboard because it's just like the dashboard that you use in your car with the gauges in your car. And order flow is to price like gas is to your car. You know, if your car has no fuel going into the engine, it's not moving. It's the same thing for the market. If price has no order flow coming into it, or if it gets into an area where the order flow stops, the market is going to reverse direction. Right? Gas powers your car engine. Order flow is what powers the price engine. Now, if you're driving down the road and you take your foot off the gas, the car's going to slow down and come to a stop. With the market, same thing. If the market's heading to the upside and you have buying coming in, which is demand, and all of a sudden that buying fuel that was coming in all of a sudden stops, you know, because number one, let's backtrack a second. And this was a situation that we broke down, we talked about live this morning in the room. These stops getting hit. We see them. We know what's happening. That's what's causing the market to kind of cycle to a new high up here. But once the buying that came into the market, the demand that was caused by those stops getting hit, from shorts getting squeezed out, as soon as that exhausts, the market stops going up, kind of just like how your engine would stop in your car if the gas stops coming into it. And again, this area here, which we call unfinished business up here, which represents a big area of supply imbalance, market came right up into this area, same time that we started to pick up on clues in the order flow. And we'll talk about those clues in just a second. But for us, it's a matter of stacking those odds, those clues, and create as much confluence as we can. You know, can we just take a trade based on the fact that the market's coming into a previous area of sellers? Yeah, I mean, if you wanted to, I guess you could, but why would you wait just for that when you could wait for situations where you have several pieces of confirming information there? Right? That's what we like to do. Wait till we can line up these clues and have what we call some synergy and confluence. Okay, so let's break this dashboard down a little bit here. Talk about things individually and give you a sense of the clues that we're looking at. Right? So in order to make the best real-time decisions, you have to be prepared for them. And I'm a very visual person. I had to figure out what I wanted my charts to help me see, and then I tried different combinations of the data, of the information, until I landed on what helped me see the information the best. Right? I was looking to decrease my inefficiency, which is the losers in trading, and increase my efficiency, my edge. Right? So what I did was take what I found to be the most important and relevant order flow information and organize it in a way that makes it easy for me to identify opportunity. Right? And when you have a simple visual way to dissect the real-time order flow coming into the market, guess what? Your job as a trader becomes a lot easier. And what you're left with is something that gives you real, actionable trading signals, alerts, and solutions. So what are we looking at here? Well, when it comes down to it, let me just split this up here first. You could say we have 3 charts that make up our dashboard, but we have really 6 sections to these charts. Okay, 1, 2, and 3, primarily price. 4, 5, and 6 is order flow information, just the order flow. These studies down here are not price driven at all. It's just based on the buying and selling coming into the market. So what we're doing effectively is measuring the difference between the aggressive buyers and the aggressive sellers that are coming into the market. Right? The traders that are using market orders, they're aggressive. They need to get their orders done right now. They have conviction. Now, we're not going to go deeply into the dynamics of that conviction, but it could be traders getting stopped out, losers, traders taking profit, traders initiating new positions. Those are the dynamics that actually are occurring beneath the surface that we go much deeper into. But this information that we're looking at, the order flow, we know from closely watching this relationship between order flow and price action that we can pick up on clues in the order flow that show up before price exhausts and changes direction. We had a couple of excellent real-time opportunities. Actually, one right here that set up when the last speaker was speaking. I didn't take a trade, kind of focusing on getting set up here, but good situation, the types of situation that we look for. Right? So let's break these studies down individually, and then we can kind of see some good examples of the synergy that took place here today. Let's talk about, we talked about our zones a little bit here. I don't want to spend a lot of time on the zones, but just think of our zones. They're areas that we identify ahead of time in the market, and they represent areas of buy orders and areas of sell orders, supply and demand. Right? And these zones are the areas that we want to look to do business. Right? So in other words, if I'm interested, if I have a short bias, I come in and say, hey, you know what? Right here, right now, not that I think the market's going to sell off 100 points, but I'm intraday scalping. I think it's easier for me to find trades here to the short side. So then I have to wait for upticks into retail value, into supply. I'm not going to look to be the guy who sells the new low only to get stopped out on the uptick. Right? We're not going to look to be buying retail value here only to be stopped out on the uptick. Right? If we want to be a buyer, we want to buy low. If we want to be a seller, we want a chance to sell on upticks into supply. If we don't get that opportunity, then we don't have a trade. It's that simple. So those are the zones. Zones are a big part of our methodology. We spend a lot of time speaking about them, how we form them, what they're made of, what makes one zone more important than another. Details that we unfortunately can't really go into here today, but there's reasons why the zones work. You know, and if you spend some time with us once, twice, you see them work, you say, oh, you know, he's getting lucky. 3, 4 times, coincidence. Once you start to see them, you know, the market reacting, that's all we're saying. We're not predicting. We're not saying, hey, the market's going to come into this zone, it's going to be the low of the day, and we're going to make new highs. We're just saying, hey, this is a logical spot if we're looking for long that we can expect to see a rip, a reaction in price. Logical spot up here if we're looking to get short that we could see a rip to the downside, a reaction in price. Whether that rip goes for 5 ticks or 5 points, again, you know, we don't have a crystal ball. We can't predict that. We'll manage that trade real time. You know, are we managing as a scalp? Are we managing as a swing trade? You know, those things are all things that we determine. But what we're speaking about here is how to identify the opportunity, how to actually take advantage of the opportunity. That's other things that we get into. So let's talk about what we have on section number 5 here. All right, we talked about zones. Chart number 5 here is what's called our BSP, buy pressure, sell pressure gauge. What we're tracking here, guys, is the momentum of the order flow, not the momentum of price. All right, so what we're looking for, and tell me if this doesn't make sense. Isn't it better to calculate the change in the momentum of the factor that's actually changing price rather than price itself? Most people are watching and looking at the momentum of price. We're looking at the momentum of the fuel that's driving price. So when we see the market making a new high here by a tick with less buy pressure, right, because that's what we're measuring here, the momentum of the buy pressure, the momentum of the sell pressure coming into the order flow, that sets up a good opportunity. It's one of the clues that we look for. All right, we see a new low in here. Does it come exactly to the top of our zone? No. I mean, we're not looking for perfection, guys. This is we're trying to identify basic areas where it makes sense to do business. And if you're looking to do business to the long side, what better information could you look for than sell pressure exhausting, buy pressure picking up, right? See order flow kind of peeling away from price. Market coming into a previous area where buying overcame selling. Little arrow here that you can't really see too good probably, but it's telling us that, hey, there's more buying and selling in here. This is one of our automated alerts, and we're probably not going to have time to get into that today. We have a couple of automated order flow information alerts that we've programmed, and all they do is make our job easier, especially if we're watching different dashboards for different markets like we do. For instance, it's a dashboard for oil. If we could have things alerted like we did here on this uptick into the bottom of the zone, we have an alert that popped up here telling us, hey, right here, right now, there's more selling than buying. That's useful information. So BSP, again, tracking the momentum of the order flow. We're looking for a new low to be made on less selling and more buying. We're looking for a new high or a challenge of highs to be made on less buying and more selling. Pretty simple. Charts 5 and 6, 4 and 6. Let me get my marker back up here. 4 and 6. And sorry if I sound like I'm speaking quickly here, guys. I just want to try and get through this as much as we can. Hopefully, it makes sense to you on a basic level, and then you can come and learn much more about it. This is the cumulative net order flow on charts 4 and 6. Same information here as we have here. We have it organized the same way. The main difference is that this is what we call our background, our BG, higher time frame. And this is what we call our foreground, our FG. This is the micro intraday time frame. Right? So it's kind of a top-down, bottom-up approach. Right? We're using the higher time frame to help us form context, to pick up on clues on the higher time frame, and then dialing down to the smaller time frame to help to form our tactical plan. Right, to pick up on the clues that we want to pick up on. Two very important clues that we're picking up on charts 4 and 6. Number one is called commitment. Now, commitment actually is a situation that we saw in here on the background, which had us looking short earlier in the market, and then the scenario that we laid out, unfortunately, it occurred too late, and we're done trading by this time, was that we would be looking to sell new highs above the 60s when we could start to pick up on exhaustion due to the fact that we were picking up on a higher time frame that shorts were staying committed on the uptick. Now, why is that important information? Right? Well, what we're doing is measuring the conviction of traders, right? If you get short at 60 and the market goes up to 62 and you're still short, you could say you're committed to your position. Now, we're not following retail traders, we're following what the smart money does, right? And if they're staying committed to a position as price comes back in their face, and a lot of times we'll actually pick on them adding to their position, that's pretty helpful information, right? Now that's one side of it. The other side of it, why can that be useful information? Well, think of it this way. If the market's making a new high, and we pick up on the fact that shorts are not buying back their positions, in other words, they're staying committed at that point in time. Doesn't mean it might not change a minute from now, but we're saying, hey, at the hard right edge, according to the information we have, shorts are staying committed. Who's going to be buying that new high? Right? Think about it. We're at the tail end of a multi-week rally here. Right? There's no news coming into the market. You'd think the smart money's waking up here the day before Easter vacation and saying, oh my God, we're making new highs here at 62. Let's buy all that we can. No, heck no. They don't buy retail. We went through that before. Right? Not to say they can't be long and looking for higher prices, but they're not buying the top tick. They're buying pullbacks into wholesale if they're bullish and looking for higher prices. Right? So who's buying up here? If shorts aren't going to be buying to cover their positions, all that leaves is retail traders getting trapped up here, right? And weak shorts getting squeezed out. Once that buying is done, the market kind of falls back on itself. And that's what we look for to identify that exhaustion. So that's why commitment is important. It tells us, hey, there's a true lack of demand here, and that should have an effect on price, and it should, especially if you have price coming into a barrier, it should stop price, and we should see a rip. Okay, the second important piece of information, let me just pull this screen back up here. Second important piece of information here is what we call our inventory transition points. And we talk about stops in the market, right? And our inventory levels basically represent stop runs. And the way that we trade, guys, the way that we look for opportunity in the market is based heavily on taking the other side of losing traders, right? Well, that's got to be based heavily on knowing where the stops are in the market that are getting targeted and being able to exploit that liquidation pressure that comes into the market based on those stops getting hit, right? So we're looking at those stops getting hit, and we're anticipating exhaustion, right? It's kind of like you're putting your foot to the metal in your car, the pedal to the floor, giving the car a lot of gas in here, stops are getting hit, right? And then all of a sudden, boom, you lift your foot off the pedal, and there's no more buying coming in. It's the same idea. Exhaustion. The market used all its gas up, and now it's out of gas because all the stops were going to get hit in this area got hit. All the shorts that were going to get squeezed out got squeezed out. There's no more buying in here. All right. So in this situation here, we actually have what we call two opportunities for entry here. An aggressive situation here on the first push up, the conservative entry here where you have more information. You know, and we'll go much deeper into that next week if you join us, but there's always two lines to every trading situation, right? You could be short, but you could be looking for a conservative short. You could be interested in a short, but you could be more aggressive, and therefore you'd be getting in on the first uptick here. Do we have any more time here, or is that it, Morgan? I think we just ran out of time.
Thomas, that was it. But what's is the best way for them to get more information to go to OrderflowEdge.com?
Yeah, go to the website that you put in there, and again, you know, we're not selling anything here today, guys. We're just saying, hey, if this information makes sense to you on a basic level, come to the website. On the homepage of the website, there's a box there. Put your email address in, and we'll invite you into the trade room next week. Spend a couple of days with us, and if you like what you see at that point, you know, we'll take it to the next step. Also, feel free to email me directly, or Casey there, Casey@OrderflowEdge.com, or Thomas@OrderflowEdge.com. Thanks a lot, guys. I wish everybody a happy holiday. Enjoy the few days away from the market, guys. Don't rush back on Monday. It's a holiday in Europe. It's probably going to be dead on Monday as well. Our trade room is going to be open to guests on Tuesday, so expect to see something in your email maybe over the weekend, and especially Tuesday morning, you'll get an invite in your email. Thank you, Morgan. And everybody, Chuck, everybody have a great holiday.
All right, great. Thank you very much, Thomas and Casey. Always a pleasure having you guys, and look forward to having you back very soon. All right, at this time, I'm going to turn things over to our next speaker, is Glenn Thompson of Pacific Trading Academy. Glenn, at this time, you can take it away. We'll put a timer up in the next 30 minutes. The room is